So as you can see, this is my chart. So I want to show you how I end up with this trade. One is today where I took this trade and earned a lot of money from this one trade. It's just a daily plus the FOMC. There was a news event that was supposed to affect the market, so as I knew the trend, what was happening, so I had to take this trade beyond my trading plans. I know most of the time I don't trade the news in the factory, like let me show you the news. First, this is today. This was the news. Unemployment claims. It's a red news, so that means it can affect the market. Thereby, some of you are not supposed, like, it's not advisable for you to trade the news, but I'll show you how you can spot trading zone, or how you can spot a news, a good setup so that you can trade in the news. So welcome to my live trading. So here I'm just giving you a review of how I took this trade. Getting a risk reward of 1:3. So I'll take you step by step. This as you can see, this is a high volatility zone compared to other days. You can see it's a strong sell, and this is because of the news event that was happening today, because this one is on Thursday. As you can see, I'm talking about the news. This is the news, the unemployment claims. We expected to, like, our focus was supposed to be 231k from the previous 241, but it was lower than that. So lower than that, creating a sell on the Euro USD and a buy on the USD currencies. So I'll take you one by one. So this one is from what time? Let me mark the zone because I only trade London and the New York session, mainly the New York session. So this is 8 a.m. New York session, and the news was supposed to be 8:30. 8:30 was supposed to be the news that will affect the market. So I'll go to the barchart.com. This is where you get the interest rate that allows me to know the trend, where it goes, where it will consolidate, or maybe goes with an expansion, because mainly the price is driven by interest rate mainly. So I come here and so this one is a free site. You can just log in your email or your Google account. You can just log in for me. It's free account. So you go to the commodities. After logging in, you can go to the commodities. Then you swipe down to you can use the 30-year bond first to confirm the trend. So this is the 30-year bond. As you can see, this is the 30-year bond worth of price action. As you can see, price sold at this one. Let me mark the zones. This is an order block. As a trader, I must know the order block, fair value gap, and also you can know the mitigation blocks. These are higher time PDRs that they can help you to spot a reversal, maybe continuation. So most of the reversal happens in the PDRs, maybe the fair value gap, maybe order blocks, also expansions. It depends. So maybe for more information, you can just go to the ACT content, inner circle content, then you can get all the information for me. Like there's a wide information. I can't tell you by this course by what. You can just get it for free. So here is where I start with analysis. Interest rate. As you all know, interest rate drives currencies of a certain country. Like let's say this is let's say you are in USA, then the interest rate may be higher, creating maybe if the high interest rate, it will create higher. The unemployment will be higher. Of course, that is the one thing. So you come here and see the price went at this point. It was at 8 a.m. At 8 a.m. New York session. This is the New York session. Price went in, then it swiped down. And also, as you can see, it's not that it went because of maybe the news. Also, the news was targeted to reach at that point, because also, as you can see here in the 4-hour time frame, as I'm telling you that you should know the fair value gap, order blocks. This do the like, it's where the prices reverses most of the time. So here, let me mark the zones. So this one is the breaker. This one, then a fair value gap down below. As you can see, price went inside the fair value gap, then drops. From this side, drops down to this order block. This is the bearish order block, but as from the higher time frame, we can notice it's a downtrend. So this one is just to trap the retailers to think that the news event will make it a buy because of the order block, bullish order block. But as you can see, we follow the trend. If the trend is bearish, go as the trend says. So the trend was supposed to be bearish, so this one is just to trap the retailers to buy so that they can sell at lower prices. So this is the point where this is an order block, bearish order block. This is the bullish order block. So normally a bullish order block is the bearish candle on the closing bearish candle below, maybe below a price, maybe below a bullish trend that closes. As you can see here, this one is the bullish candle, and this one is the bearish candle. So price went in. Let me mark the zones. So price went to the bullish candle, then it was driven up so that it can collect more sales, then drops. So here, I think here is where it's also 8 a.m. the New York session opens, and it's where the high volatility starts. So first, there is high volatility. Second, there is news occurring. Third, also this, like if the New York stock exchange is open, so that means many trade will enter. Maybe the big funds, the institution, the huge funds, they also enter where when the market is open in the New York session, because they need the volatility to drive the price. So here's a fair value gap. As you can see, it went down. So this one is the 30-year bond. You can also look at the 10-year bond. So sometimes Forex is boring, but this is where all of us make money from. And this is where we ignore some things and we end up losing money. So it's worth learning every single thing. So I can give you this. You can look the 10-year note. So here you select the one with more volume. As you can see, I selected the first one because it has more volume. This is where institution, maybe the commercials and non-commercials, they take the buys and sells. Because you see, it was a sale, the price was supposed to go down. Then we go to so this one is a Euro USD, so it must do opposite. of what the USD is doing. So if this is selling, that means the USD it was buying. So for the USD, we can go to the futures. As we can indicate, every the interest rate, the 10-year note and the 30-year bond, they were selling. It was supposed to go down. As you can see, the oil went to the high time frame, like here. It's also another block. Then they sell. Then you are trapped here. That is a buy. Then they sell. And also they had swept the liquidity, and also it's a fair value gap zone. That is the indication one. And you come for the currencies. You got the futures, then the currencies, then you select the dollar index. So this is the opposite. This is the future dollar index, the opposite of the Euro USD. So as you can see, the dollar index, it will be opposite, more opposite than that. So this is a 4-hour chart. As you can see, they will mark the 8. I can mark, let me mark for you. Let me give you a show. Let me mark for you the 8 AM and show you how the magic happens. This is the 8 AM. So on the 8 AM, as you can see, this price was supposed, it has gone down, so it was supposed to break to go at this zone, then to go down. Many people are trapped here saying, the price will go down, the price will go down. As the Euro USD people are saying, the price will go up. So many retailers are trapped here, creating more liquidity so that the liquidity can help the market to drive higher. As you can see, the price moved across, moved upper, creating a fair value gap. I'm telling you that the fair value gap is more important for you to learn. Let me just remove this. Then, so the fair value gap, as I can tell you, it's a gap between two candles. The 3 candles consists of 3 candles. That is the center one must be larger than the space between each. So between the first candle and the third candle, there must be a space in between. So for it to be a space, the second candle, the middle candle, must be bigger than the rest. So as you can see here, this is a fair value gap. So price in every fair value gap, price will come back to the fair value gap to fill the fair value gap, because here it's like price has driven higher, creating like imbalance of the price. So this one is like all the buyers are trapped, but some of the buyers, like it's a gap from here, so the price will come back. It is obvious, one of the rules, that every fair value gap will be filled. Every fair value gap will be filled. And I'll tell you this, go learn about the fair value gaps, but make sure that you are ready when it comes to fill the places, because you can fill it either, this one can be a bullish fair value gap or bearish. So if it breaks below this one, let me give you a, let's say this price went down below, then it can go up, it can go on this one, then it can go down. So this is the fair value gap, but it can be inverse fair value gap. It breaks through it, then returns to it, then it goes down below. So this one was filled, as you can see. Let's move on. This one was filled, then after it was filled, the price went up. After filling the places, it went up. So it went up to the, here's where it went up. So it went up, creating the order block, bullish order block, and price returned to the bullish order block also once more, creating more volatilities, because in these order blocks we believe because about my mentor said that in order blocks there are many orders resting up below, resting on the order blocks, maybe above or below, they're resting there. So the price can go with many orders, so it can go up like here. It went up, but some orders were left, so it came back from the to the orders to collect the other orders, so that the price will spike out. As you can see here, it's also 8 a.m. Price went to the order block and spikes up, leaving a fair value gap, and trust me, this fair value gap will be filled. Maybe not tomorrow, maybe tomorrow but one, but this price gap will be filled sooner, because every fair value gap will be filled. It's just a matter of waiting and preparing. When it is filled, how are you prepared to take the trade? Because there might be maybe the price may return to the fair value gap, but not down below here. It may return maybe halfway or maybe quarter, just to take some orders, then raise up. But in future, it will all be filled. So this is a 4-hour chart, so it will take time for it to fill, but it will fill. So this one is the uptrend. This one is the opposite of the USD. As you can see from here, I think you know correlation. Like if this price, so if the USD is going up, the dollar index, that is the USD currency on itself in the futures, it will go down. And if the USD is going down, this one, the dollar index, it will go up. So it's like an inverse correlation. So this one going the opposite, they're going opposite each other. This is how they're driven, because the base currency, so the first currency always is opposite, must be like it's Euro USD, Euro then USD. So if Euro is going up, Euro must go down. So that's an uptrend. If Euro is going down, this one must go up, then that is, they're going opposite direction for it to be a trend. And that's so you can come after here, you notice, oh, this one is the order block, and it will return to fill it. And also, as you can see here, it's an uptrend. It has break of structure. So price breaks of structure. This indicates a change in direction, because it was a sell, then a buy. So price will come inside, but just know that it will not come just below the price. This one is the lower low. It won't go beyond this low, or maybe also below this low. Yes. So this was indicates that a change of character. Mostly say market structure shift. And after this, like market structure shift, you normally have fair value gap mostly, but the fair value gap was already filled. So fair value gap was already filled, so we waited, we just entered the order blocks, making a trend. Then we come at the calendar event, and here we don't know what is happening, so we come to look at the news today, so that you can't be surprised, like, why did this happen, like what happened. It was supposed to happen, because you're not prepared, but everyone is prepared except you. So this one, 30-year bond action, this one is also affecting the market today, but it's after I took the trade. It's after I took the trade, because it's now at 8 p.m. and so we look. So here we are anticipating a trade in the New York session, that is a red one. So we come at the USD. For this one, it's not that I just took a trade based on the other currencies. Also, I analyzed these currencies by itself. So we are starting from weekly chart to 1 hour chart for us to take this trade. So we can start with the weekly chart. I can show you. I can clear the chart so that you can get to know what happened for real. So actually we start by the weekly. As you can see, weekly, this is the week chart. The price is indicating a bearish move. So this level has been swept, so we anticipate this one to be the higher high. And mostly we plot a Fibonacci, this one, so we mostly find it at this area. On the left, you click here, then the Fib retracement. Then you get this one, you mark the low of the day, the low, and the high. So any prices above here, above the 50 range, so this is the sell, this is the buy. As you can see, price, this one is a fair value gap. I'm telling you, fair value gap will one day make you reach fair value gap. This is a fair value gap, but it wasn't filled because of due to many orders. So this is a fair value gap. It came back to the fair value gap, then rally up, as I'm telling you. But this is a weekly chart, so it will take more time for it to fix, to close in this place, but it will soon, trust me, it will close. Maybe this can take also like 1 year, because for this price, maybe from here it was March to March on 24th to May, so it can take maybe next month it will fill here, because I anticipate that the trend will sell. So this is a weekly chart. You can compare it to the season tendency. So the euro, as you can see here, is where we are. So let me remove the 2-year notes. So for the 5 years previous, the previous 5 years, previous 10 years, previous 15 years, and previous 20 years, the price drops on May going to June. It drops, like it's like something repeatedly. So sometimes you say history repeats itself, and it's not like it's improved. So you can sell any May, you can look for a set position, then you enter. You can take an out because our account balance, but I assure you this, most of the time it happens, because if you keep in the 2 years note, you can see it rarely, because due to some events, maybe economic events can affect also. So this one is running, it's going down, and as you can see on the dollar index, we saw it going up, and also for sure this is going up. So this is a true indication that you are right, like the trend, you are right on the trend, that the trend must be bearish. This one, so one, then the two, we look at the daily chart. This is the daily chart, so every candle is a daily chart. So as we can see here, price, I'm telling you, the chart is clear, like nothing is going on. So let's mark like a beginner. So in the other blocks, I will keep them the red rectangle. Then on the fair value gap, I'll keep a yellow one. That is how I mark it. So you can also keep this one to mark the PDRL. So as you can see, we are up the 50 range, so we are looking for sale opportunities. So here, as you can see, I can structure shift. So this one, it means the change of character, the change of trend. So it was supposed to, maybe if it didn't break this below, it should be an uptrend. Maybe it's just seeking liquidity, then it goes up. Maybe because of this order block, we might anticipate maybe a rally. But according to the old confirmation, we are waiting for bearish on EURUSD. And thank you for being with me. So let me continue. Allow me to continue, and don't forget to subscribe. So we are going to analyze this. So this one, so we're coming from let's say we mark the zone also. So whenever it breaks a low, So as you can tell, the many YouTubers say, let me give you a short brief so that you can never miss this one anywhere. So this one, this one, this one, this one, this one, maybe this one, and this one. This one is what we are supposed to happen. So let me give you a short. Let's get away from this chart. We come here because it's not about being happy with what I got. It's about helping you for your future career, so that you can continue this knowledge. So it will be a skill that you have to do every time. So how will you know like it's an uptrend? So we'll know it's an uptrend if this is a downtrend. If it's an uptrend, so price will break above this one, then it will trade higher. As you can see, this is like stairs. They're going down because every stairs, as you can see, it seems breaking above. As I can see also, this one can be your stop loss. It won't be breaking, and it can, but trust me, it's more way important. Like, and also you can see it's breaking it's not breaking the higher highs, but the lower low, indicating if it's breaking only the lower low, that is indicating it's going down. As you can see, naturally it's going down. Like without saying this, it's going down. So don't expect to get a entry for buy, because it'll be like, it'll not be wise for you to get a buy in something you are seeing clearly it's going down. So you're looking for sell opportunities to go with it down below. So this is where I tell you, this is the easiest setup. So in many YouTube videos, you see people analyzing this market, but when you come to the reality, this is how it is. So let me move it this way. Let me clear the chart so they can be clear. So this one, as you can see, it's going down. So this one is a order block, bearish order block. Price went in, then down below. So this one is where we anticipated the price to go in, then down below. Then it went inside also this one. We want to mark this zone. So let me change this color because this is where I got my setup. So the price opened, then went down below, second forward. So here we also plot the fib retracement here to mark the halfway, because the price want to go halfway. You can use this one. Let's say we did this one because you know already it's going down. Then use it here. So this one it will go halfway. So bear in mind, this one is the order block, and this is the daily chart, as you can see. Then you're going for the 4-hour time frame. As you can see in the 4-hour time frame, price went inside here, and we can delete this one so that we can have a clear zone. I told you once again, if you see a fair value gap and a market structure shift. So a market structure shift, this is what a market structure shift looks like. Let me show you, because I wish I knew this early enough. So if the trend must be bearish, maybe it's going down. So it must be like this one, it must form a downward. Then in between, there must be a fair value gap. So price, after the fair value gap, price will go inside, then down. That's how I make a structure shift. As you can stop for spot here, make a structure shift. Once more, this is my very best. So this is how we get the trade. As you can see, this is the market structure shift. Let's keep it at green. Then a fair value gap. As you see, the fair value gap will be a yellow. So it was a daily order block and also a fair value gap. So this is a fair value gap. It was this one is for the Wednesday. I didn't catch this trend because it was at 9 p.m. and I wasn't awake at that time. I wasn't on my chart at that time according to my rules. So this price went in, then down below. So that means price will not come across or over this highest high of the day. So as you can see, we have order block also here, a bearish order block. So bearish order block means price will go like, if it's a bearish order block, that means let me show you something. I'll show you something so the beginner they can understand. So if it's a bearish, have you noticed something? Like in every low, like in every lower low, price will check it, will come up, will turn to the lower low, then goes down. Turn to the lower low, then goes down. Turn to the lower low, then goes down.